Alright, what's good YouTube? It's your boy FOREX here, and today I'm bringing you guys a pretty basic video as far as like trading in the market. I'm going to be speaking about liquidity grabs and how you can use liquidity grabs to use it as either a take profit, or you can use it as an area to basically not have your stop loss, because as we know, liquidity is basically where money and pending orders are sitting at. So peak lows can be equal highs or equal lows, also known as double tops, double bottoms, or they can be known as swing lows and swing highs. Now this is gold off the 1 hour. Now I marked up a couple zones, so let's get into it. Okay, so this is today, by the way. Okay, so the market right here, the move started, the bank retail traders in the bank started pushing price up, but then it kind of came down. This is actually a fib play. Since this low is a swing low, there's money sitting down there because people who are taking this buy, this is off the 1 hour. Now people who are taking this buy, their stop loss is sitting right underneath that zone, and they're targeting these highs, these liquidity. Sorry for the music in the background. People here, it's too much. Anyways, so people here, so buyers, their stop loss is sitting right here. This is off the 1 hour. Now let me say this real quick. Liquidity can be seen on all time frames. Now obviously, me, the way I trade, I base everything off the higher time frame, just because that's how I learned, and it makes sense. That's just how I trade. It makes sense. So people who took this buy, their stop loss is sitting right underneath this zone. Okay, now their stop loss is sitting underneath that zone. Now let's look at these. Look at this double top right here. Okay, no candlestick wants to close past that zone because there's money sitting up there. So people who are taking this sell, they're gonna get destroyed when the market pulls back and then starts shooting up. So let me show you what I mean. So let's go to the replay mode. Okay, and by the way, the market stops out traders all the time, like all the time. People are getting stopped out all the time. So let's take this off, okay, so that you can understand what I'm talking about. People get stopped out all the time. That's why on my trading plan video, that's why I said specifically I am a scalper or an intraday trader. I'm not holding my positions past longer than a day. Okay, so let's go to the replay mode. Okay, so you have a couple positions. No candlestick wants to close above this zone. Now they grab liquidity on both sides, because some people also started buying down here as well. Like some retail traders, they started buying down here. You see how this low dipped lower than these lows? This is a range. So some people who are holding this range for whatever reason, they just got stopped out as well. So there was money sitting there as well. Okay, so they just grabbed liquidity to the downside. So if they got the lows, where do you think they're gonna go next? The highs. So let's look at what happens. It kind of starts ranging, and then boom, this candlestick right underneath, it closes above, but it wicks up. It closes underneath, but it wicks above the this double top right here. Anytime you see double top or double bottoms, there's liquidity sitting down there. Okay, let's look at what happens next. Let me fast forward. Boom, people who are still holding this buy, they also just got stopped out. Again, this low dipped lower than this low. So now where's the real liquidity? On the downside. Okay, let's look what happens next. Boom, and that's today's market. That's the market for right now. Okay, so even people right here, the market does this all day. Like, this is clockwork, identifying liquidity zones for me now. Okay, you want to properly backtest this. Let's take it back. Okay, where's liquidity now? People who took this sell during London session, they made their money because they grabbed that liquidity on that low. Now if they try to hold this sell, just because there's areas that have to get filled, once New York session opens, and once New York session and the stock exchange opens, they get destroyed. What the hell? Let's replay that. Watch. Alright, so one down candle. It tries to scare you, right? Because people who actually took this buy, their stop loss is sitting right underneath that zone. So that one candlestick tries to scare you. Now for people who know how to trade institutionally, if you scalp this, you're getting almost a 1 to 4. Okay, so this red candle tries to scare you, and then boom, I don't know why it keeps doing that, but then boom, the next candlestick right at 10 o'clock, it just shoots up there, so it grabs that liquidity up there. Okay, remember, liquidity is double top, double bottoms, or peak highs and peak lows. Okay, let's go on to the next example. Let's look at this example. Okay, let's take this off. Remember, you want to be able to properly back test this. Okay, so we're seeing a bunch of retail buyers. Okay, they're pushing price up. The next couple candlesticks, price kind of rejects off of a zone. Since people are buying, their stop loss is right underneath this wick. And let's look at what happens. Now the banks are in play. Still have to come get them. Still have to come get them. Now the banks are in play, right? This, hold on, let me point it out. This low did not go lower than this low. So since this was a demand zone, the market have to come back down to stop out these traders. Okay, because this is obviously the banks are doing this. The banks, the pensions, hedge funds. Now where else did you see liquidity? Right here, people who sold right here, you know, at their stop loss is sitting up there. Let's look at what happened after the banks hit that demand zone. Okay, like I said, the banks, they stop out traders all day long. So let's look what happens. They come down. Let me draw it out so that it makes sense. There's a demand zone right there. Okay, now the market, it pulls back, it rejects off that demand zone, starts rejecting off the demand zone. Now you see a bullish engulfing candle. Where do you think they're gonna go? Where do you think they're gonna try to target? These highs right here, because this is where the selling September 27th started. Okay, there's liquidity sitting up there. Now let's look. Boom, look at it. So you try to drag it out. That wick is higher than that wick, so they got these sellers up here. Okay, but they still have to come down to get these buyers down here. The market will stop you out. That's why, again, during my trading plan video, this is why I say I do not swing trade, because people who swing trade, I feel like they're swinging positions, but I feel like they're not swinging positions for that long. Also, if you notice, this is a W. It's a messed up W, but for those people who trade M's and W's, that's a liquidity grab right there. You get in the highs, the peak highs off the 1 hour, and people who trade M's and W's know that this is smart money concept. Comes down, pulls up, you wait for the pullback. Right at from point 2 to 3, they shoot it up, and they just grab that liquidity. Like I said, sorry for the noise in the background. I live in New York. Like I said, there's still this low that they have to come get, because people who took this buy, their stop loss is still sitting there or is sitting at break even, basically. Let's look at what the market does. It continues pushing up. Yeah, alright, it continues pushing up. So let's go to the next example. Okay, where's the next example? Let's find it. I just marked it up. What the hell? I just had it marked up. Alright, well, I mean, that was pretty much the last example, but yeah, that's pretty much liquidity. You have equal highs and equal lows. It's pretty much where the banks, it's basically where money is sitting at. Like, the banks will stop traders out all the time. Like, the banks still have to come down and get these buyers right here. Even right here, more people are buying. This swing low right here, I'm not gonna draw it perfectly, But that swing low right there, that's also liquidity. People who took this fib long, their stop loss is sitting down there. People who took that Fibonacci long, their stop loss is sitting down there. Let me draw it out again. Their stop loss is sitting right underneath here. They push price up. TP1 gets hit. You wait for the pullback. It hits the golden zone. You shoot up. TPs are smashed. But people who are still trying to swing these positions, their stop loss is sitting up there. All it is, like some of this other stuff, is still have to get filled. And being that it's NFP, I really feel like they're gonna use news to push price down, because there's some stuff that here have to get filled. There was hardly a pullback off those candles, because all they were doing was just filling in these orders and grabbing liquidity to the upside. So yeah, like I said, they still have to get these traders and these traders right here. So I feel like, being that it's NFP week, I feel like what they might do is, with news, push price down to grab liquidity there, and then they might bring price back up to start filling in all these orders. Because let me tell you, for the past couple weeks, like, the market has just been super bearish. So yeah, there's liquidity all over the place. So do me a favor, please backtest this. I'm dropping gems as far as like this channel. My course on my website are almost done. Please be patient as far as my course. But yeah, this is basically liquidity. It's just swing highs and swing lows, or double top, double bottom. So please do me a favor, like, comment, subscribe. I will be bringing more videos. My next video is going to be basically about market structure, because I feel like most people still don't understand market structure and the overall direction of the market. And then I also want to be bringing out my Fibonacci strategy. So if you want to definitely see my Fibonacci strategy, definitely comment down below. But yeah, with that being said, please like, comment, subscribe, backtest properly. My course teaches about liquidity and how to I don't want to say avoid getting stopped out, but because you can't really avoid getting stopped out, but basically we have to try our best. You know, if you can see that liquidity is there, wait till they grab liquidity, then get in the trade. But with that being said, I hope you guys learned from this. Peace and love.